Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Monday, March 13th, 2023. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So I had intended on starting the episode, kind of where it logically would start, which would be to review the Bank of Japan's March policy meeting, but that seems, silly and misplaced given the collapse of Silicon Valley Bank on Friday. So I think it would be much better to discuss on how that event, if you will impact Japanese financial markets as well as Japanese investors globally.
Okay. As I discussed in the weekly outlook later, I'm wary of drops for dollar yen and the yen rates. And while I expect inflows from foreigners for the front end of yen basis, the long end is still more likely to widen. Japanese companies, they have large-scale investing portfolios, so their global business risk increases significantly nowadays when the dollar cash market flow tighter. The end of the quarter is at hand, and I doubt Japanese investors will rush to get dollar asset funding since they tend to be conservative. The US Fed has announced the creation of a new bank term funding program, so there is little risk of funding become unavailable since borrowers can go to the Fed. Still, safe assets will likely continue to prevail globally, while the risk assets are unloaded, and not only among Japanese investors. Fears are unlikely to alleviate immediately and easily as soon as flows appear to shift, and global investors may seek safety in JGBs and yen.
Okay, so a couple points there. So wary of the drop in dollar yen and also the rally in JGBs. You interestingly say that you don't necessarily think Japanese investors are going to rush to get dollar funding and might behave a little bit more measured. But also point out how how JGBs are a flight to quality. JGBs and the yen are flight to quality instruments. So a couple different cross currents there. That bear watching. But let's again kind of go back and I think we would be remiss without discussing the March Bank of Japan policy meeting. So take us through some of the high points.
Okay. The Bank of Japan left its range of the yield curve control operations at 50 basis points while leaving the policy rate at minus 0.1% and the target 10-year JGB yield at around zero at the March 9th to 10th Monetary Policy Board meeting. Immediately after the meeting, yen rates fell and yen basis tightened, mainly because of the abundance of surplus yen funds and a buyback of JGBs. Dollar yen ticked up, but only for a moment. Price action in an immediate wake of the March meeting shows that the speculations about the supply's decision at outgoing Governor Kuroda's final meeting was more pronounced in a JGBs than in a dollar yen.
Yeah, that was interesting. There's a pretty big rally in the JGB market, but dollar yen didn't really move. Much at all, as you point out.
Right.
So I, as you highlighted and as you referenced, there was some speculation that Kuroda could go out with a bank. He chose not to do that. So that leaves us with some question marks as to where the BOJ goes from here under the leadership of the new governor Ueda-san. So why don't we talk about that? Why don't we talk about your outlook for Bank of Japan policy under the new BOJ leadership?
Hope about the last minute Kuroda supplies at his final monetary policy board meeting was dashed. However, once JGB and yen rates asset positions are short covered, market speculation will likely tend toward a revision of monetary easing. BOJ acknowledged the present CPI level at around 4%. Going forward, we expect activities to pick up as investors reply to revision to the joint statement. The BOJ must end its overshooting style commitment in order to manage Japan's monetary base with neutrality. This only can be achieved in the joint statement, as it is beyond the scope of the BOJ's monetary policy decisions. On March 10th, Chief Cabinet Secretary Metzo commented that discussions between the government and income BOJ governor will be necessary ahead of the revision of the revising the government's BOJ joint statement. Governor Ueda and Deputy Governors Uchida and Himeno's communication skills will likely be tested in regard to revising the joint statement. At present, unless the joint statement is amended, the BOJ's framework does not appear to allow for making changes to massive monetary easing. Just last week, the incoming BOJ leaders were confirmed, and Kishida administration mentioned the joint statement of BOJ, joint BOJ and government statement. We think that Governor Ueda will start to move with more deliberation toward revising the joint statement soon.
Okay, makes a lot of sense. So Kuroda did not do it on his way out the door. You've mentioned in your research pieces as well as on the podcast how the current monetary policy currently doesn't fit the current situation, and should, I think you mentioned, should kind of go back to the early days of back to a simpler version of what we saw perhaps during the early days of Kuroda's term. But the BOJ needs to end its overshooting style commitments, obviously causing some serious dislocations in the JGB market, and is somewhat counterproductive, given inflation problems in Japan. So we'll watch for that, starting in April. But why don't we do this? Why don't we, before we wrap things up, go over your outlook across the various markets, including yen rate, spot dollar yen, and yen basis.
Global financial market condition has changed with the collapse of Silicon Valley Bank last Friday. Over the near term, we expect the policy forecast to shift from the US CPI on March 14th and other economic data signaling financial risk contagions. The Fed policy stance could change depending on economic data, but more by fears about financial systemic risk contagion. Yen bias has shifted 2 notches from bullish to bearish, with a lower the trading range 132 to 135. The yen swap rate curves are fallen. The BOJ held steady at its March meeting, and the reversal of the JGB and the yen swap rate positions in anticipation of a surprise decision have dominated price action. March 20th is a JGB redemption day for 5-year, 10-year, 20 years out of the fiscal year end. The JGB redemption thought the Tokyo market with yen cash plus JGBs, especially TBBs, are likely to become more popular amongst mounting the fears of risk contagion in global financial markets. The JGB curve will come under falling pressure as front-end rates are more dependent. Yen rates bias has also shifted by 2 notches from an upward and a steepening bias to a declining and flattening bias. The yen basis curve is tightened. The Japanese investors may pause in restocking their medium to long-term foreign bond holdings, while there could be more foreigners' inflows into JGBs. We expect the yen basis bias to change from neutral to tightening in a short end and widening in a medium to long end. The front end could tighten in anticipation of cash inflows from foreigners, while the belly through the long end could widen as a result of conservative dollar asset funding amongst Japanese companies investors.
Yeah, that's interesting. You think in events like this is sort of a universal widening in the basis, but point out that really is a front end of the curve phenomenon. So interesting that interesting to see the different view. The basis obviously widened significantly in the front end. So you're saying it could tighten back. Also, in yen rate, you have a declining and flattening, a declining and a flattening bias, and you're bearish on dollar yen. So there's a ton of stuff going on. So Sekido, I'm really excited to have you back on the podcast next week. Markets are fast moving, and we will obviously keep up with them. So thanks again for coming on the podcast.
Thanks for having me, John.
And thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.